What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring to all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data, but we are seeing something very interesting start to happen with AMC and GameStop's cost to borrow. Now, we've all seen those 100% utilization numbers over the last couple of weeks, and I've kind of tried to get across to you guys that the real important number that we have to keep a lookout for is actually the shares on loan that we're being told about. Just because that utilization number and where the cost to borrow was didn't really make a whole lot of sense. We're seeing very, very high shares on loan. The cost to borrow is starting to increase, so we're going to go over the implications of this happening as well. And on Stonko Tracker, who is only getting their data from one broker, is indicating that there are 0 shares left to borrow at the broker that they are getting their data from. Now, in addition to this, we also have to talk about this Citadel situation and if they are facing default and the potential for these massive losses coming through to this firm. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn it. If you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you've seen it in all the live streams. We have a lot of people that are really finding a lot of success with this 1348 trading strategy. If you do want to learn more about it and get those alerts on the 350 plus stocks on the 3-minute, 15-minute, 30-minute, 1 hour, 4 hour, and daily timeframes, as well as crypto and all of those private live streams that we are offering, make sure you check out that link down below in the description. So AMC had a crazy day today along with the overall market. So we were up about $0.77, so 77 cents, sorry about that, 5.32%. And we did end up getting that 25 basis point rate hike. Now, the news of that came out right around here. We sold off and then honestly went on a little bit of a moon mission back up, finishing above $15. Now, the reason why finishing above 15 is kind of important, and if we can hold that through the end of this week, that would be really, really awesome, is these 30,000 put contracts being held at this $15 strike. If the market makers are hedging these, there's a decent amount of shorting going on. And if they then find that they no longer need those short-term hedges on these put contracts that they've sold, well, we could see a little bit more buying volume put into the stock, pushing the share price even higher. Now, when we come over to some of this Ortex data right here, we've got 100% utilization, which I don't really fully trust still. We have 2.13% average cost to borrow with a max cost to borrow of 8.93%. That is very, very good. We're now seeing the minimum cost to borrow at what that average number that we kept seeing pop up, that 1.47% number. So this is very, very solid. But we still have 108 million shares estimated to be sold short with 131 million shares on loan. So they still have a lot of shares that they can potentially use against us if they see fit. And we also have that 21% estimated short interest. We're also seeing days to cover at pretty much at the high over the last year as well. So 2.79, again, days to cover is essentially the amount of shares sold short divided by the average volume in a previous period. So it just kind of shows you how hard it would be for these shorts to get out of their position if they chose to do so. Then coming over to GameStop over here, they have a pretty massive increase in their cost to borrow as well, which again, when these stocks move together, we see those increases in the cost to borrow. And if one of these stocks starts to run, most likely the other one is going to follow. So this is listing 100% utilization as well, 20.69% estimated short interest. And we did see the cost to borrow at around that 6% range for a while today, but then it ended up falling to 5.4% average. Now, when you think about these cost to borrows going up and where the stocks are at the current time, if these shorts start to lose kind of the gain that they've already had by shorting AMC or GME over the last couple of months, well, that's not really something that they want to see, especially after Powell. We're starting to see some of these neutrality talks and kind of the ceasefire talks start to pop up. They haven't really fully developed yet between Russia and Ukraine, but we're kind of waiting to see what happens with that. If all of these bearish catalysts kind of start to settle down, we could be in for another run in a lot of different sectors of stocks, and that could really push AMC, GameStop, and a lot of these other stocks a lot higher. And when they have these higher cost of borrows, it's going to be more expensive for them to hold on to these short positions. But again, we're not really at those levels yet where we would see a massive, crazy spike in buying due to these shorts covering yet, but we are on our way there, and this trending up of the cost to borrow is a very, very good thing going forward. Now, coming over to Stonko Tracker as well, again, right here, they are showing 0 shares available to borrow, again, with a 0% average cost to borrow, just because they're saying symbol removed from the data file, expectation is no shares left. I believe this is the second time we have seen this pop up in the past. The first time, I believe, was when we first shot up to that quote-unquote 100% utilization number when Ortex started showing us that. Now, let's kind of get into this Citadel situation with the default. So when we come over to this article right here, Citadel, DE Shaw, and Sculptor are among bondholders in Russia's Yandex. Russian company says they can't afford to redeem the convertible notes, which obviously Citadel, DE Shaw, and Sculptor are holding, meaning that their investment right now is essentially and potentially worthless. Yandex is in talks over potential restructuring of $1.25 billion worth of debt. So when we're looking at this situation right here, we can see down here, the Russian tech company's U.S. shares have been suspended for more than 5 days, enabling bondholders to ask for repayment in full. The firm has already said that it does not have the money to redeem the $1.25 billion bonds, which are meant to be exchanged for common stock. So essentially, Citadel has a worthless investment right now. And this is not the first time that we've seen Citadel get into this situation. Citadel and BlackRock, about a week ago, we saw a news article come out that they were shorting some of these defense stocks in the European market, and they had to cover some of these shorts. So Citadel's taking a loss over there, and they're facing potential default from this Yandex organization as well. So it's not necessarily a Citadel organization default. It's that one of the bonds that they are holding in a company, that company is looking to default on that debt that Citadel is holding. It's kind of similar to that Evergrande situation that a lot of people have been looking at in the past. And guys, I know a lot of people are still kind of worried about the AMC price action right now, but if you watch my video from a couple of days ago called Is AMC Over? We just kind of went over all of the things that we were talking about and just why it does not seem that this situation is even close to over at the current time. We do have GameStop's earnings tomorrow. We have the potential for a lot of these bearish catalysts to kind of stop weighing on the overall market. When you think about what the Fed has just done, well, they did that first rate hike of 25 basis points, and then they moved the discount rate from 25 basis points all the way up to 50 basis points. So what we're kind of seeing here is a lot of these different catalysts are moving according to market expectations. When that starts to happen and things start to move the way that a lot of big money is expecting them to, remember, we've been talking about this for a while. There is a lot of money waiting on the sidelines to buy these dips. Now, some of that is coming from the bond market. We've seen these weird moves in TLT and the SPY where they've kind of been linking up in ways that they shouldn't have. But in general, we've seen a lot of net outflows from the market in 2022. Eventually, that capital is going to need to find somewhere to go, and potentially it could come back into AMC, could go into GME, could go into value stocks. But again, it does not seem as if these situations are far from over. AMC is continually increasing its value fundamentally as a business. GameStop is still working on what it is working on with the NFT marketplace, and we're still waiting on some updates from that as well. We have a lot of solid catalysts ahead, and as Adam Aron said in the most recent earnings call, he said, don't necessarily pay too much attention or set your hopes too high for the Q1 of 2022, but Q2, Q3, and Q4 should be very, very solid. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys bright and early on the live stream tomorrow morning at 8:30 a.m. Eastern.